With all the noise in the markets every single day, it's easy to miss the real signals. But a signal has emerged. It's a quiet one. It's not going to make the headlines, but what it means for your wealth, well, it's profound. This isn't about causing a panic. Not at all. It's about understanding a massive shift in the global financial system. And our job today is to separate that signal from all the noise.
Here it is. This is the number. $688 billion. What you're looking at is the single largest sale of U.S. sovereign debt by another nation in history. A number this big isn't just a portfolio adjustment. No, it's a deliberate strategic message, and it's one we need to pay very close attention to.
So the knee-jerk reaction you'll hear out there is that this is some kind of hostile move or maybe a sign of panic. But that's the noise. Our job as thoughtful strategists is to look right past the emotion and get to the logic. Is this just a reaction, or is this the calm, calculated execution of a much larger plan? That's the real question we have to answer.
Yeah, this number is more than just data. You have to see it for what it is. A carefully written message from the second largest economy on the planet. It's a statement about how they see the future of the US dollar system and, more importantly, their own place within it. Or perhaps their calculated move to step outside of it. Okay, so the facts are indisputable. They come directly from the US Treasury's own reports. China's official holdings are at a 14-year low, and the pace of selling is picking up. This gives us our baseline reality. But, as you and I both know, in the world of high-stakes finance, the official story, well, it's rarely the whole story. To really get the scale of this, you have to understand financial proxies. Think of it like this. Nations will often use other countries, places like Belgium or the Cayman Islands, to handle their transactions quietly, off the main stage. And what that means is that the official $688 billion figure is almost certainly a very conservative estimate of what's really happening behind the curtain. This move didn't just happen out of the blue. To really grasp what's going on, we have to place it on a much bigger map of what's been happening geopolitically. It's one big, important dot, for sure, but it connects to a pattern that's been taking shape for years.
Think back to 2022, the freezing of Russia's assets. That was the moment everything changed. It showed the world in no uncertain terms that reserve assets were not safe from politics. Then you see key U.S. allies, like Saudi Arabia, start talking about selling oil in something other than dollars. So in that context, China's sale isn't the start of the story. It's a dramatic acceleration of it.
So, how do we make sense of such a complex strategy? Well, I think we can break it down into 4 key pillars. They're all connected, but looking at them one by one is really the key to seeing this new landscape for what it is. The first pillar is simple. It's about defense. It is a direct, logical response to seeing the financial system used as a weapon. The number one goal here is to make your national wealth untouchable, to insulate it from foreign political decisions, basically to sanction-proof it. This number was the catalyst. $300 billion. Frozen, almost overnight. For every single central banker around the globe, that single event rewrote the definition of risk. It proved that who holds your assets is just as important as what those assets are.
The takeaway here is stark. Any asset you hold in a digital account in another country, it comes with enormous counterparty risk. It's now understood that true financial sovereignty only comes from one thing: holding real, physical assets inside your own borders, under your own control. And that leads us directly to the second pillar. See, it's not just about selling an asset. The really critical question is, where does that money go next?
What we're witnessing is a historic rotation out of paper promises and into physical reality. And look, the cash from these bond sales isn't just moving into another currency like the euro or the yen. No, it's being systematically converted into hard assets. We're talking about strategic buying of precious metals, energy reserves, productive farmland, and other essential commodities. This isn't just about stockpiling resources. It's a calculated strategy to lock down the physical things they need to run their domestic economy, a policy they call dual circulation, which is all about self-reliance. It's about building a fortress economy, one that's less exposed to global supply chains and foreign financial pressure. The third pillar. This is where things get a bit more offensive. It's about recognizing that when you're the world's largest creditor, you hold a very unique kind of leverage over the world's largest debtor. By simply changing your behavior, you can start to dictate economic conditions from the outside. Take a look at this. Now, while China gets all the attention, they are far from the only major holder of U.S. debt. The real systemic risk here is what happens if other nations, think Japan or the BRICS countries as a group, decide to follow their lead. China's move basically gives everyone else permission to start asking the same hard questions. I mean, just think about the basic market logic. When the biggest buyer of something for decades suddenly becomes its biggest seller, the entire market structure has to change. All of this new supply of bonds hitting the market puts a natural upward pressure on U.S. interest rates, and that affects everything back home, from mortgages to business loans. And that brings us to the fourth and final pillar, which is by far the most ambitious. This isn't just about leaving the current system. It's about using the money from that exit to actively build a brand new parallel financial system, one that can operate completely outside the dollar's influence. Here you can see the two visions side by side. You have the established system, all built around the dollar, the SWIFT network, and U.S. bonds. And then you have this emerging alternative, built on non-dollar trade, new payment rails, and maybe, just maybe, a currency backed by a basket of real-world commodities. So you really need to see that $688 billion as seed money. It's a massive transfer of capital out of the old system and into the construction of the new one. For any country that wants a multipolar world, getting out from under the dollar isn't just an idea, it's a strategic necessity. So, what does all of this mean for the US? Well, these geopolitical chess moves create a very real, very difficult problem for the Federal Reserve. You could even call it a strategic checkmate. The mechanics here are pretty straightforward. It's an unavoidable chain reaction. Foreigners sell bonds, which increases the supply. To find new buyers, bond prices have to fall. When prices fall, yields, which are interest rates, have to rise. And those higher rates then ripple through the entire U.S. economy, acting like a giant brake on everything.
And that chain reaction backs the Federal Reserve into a corner with no good way out. They have two choices. Option A, they can print money to buy the bonds China is selling, but that risks triggering serious inflation. Or option B, they can step back and let the market find a price, letting interest rates soar, which risks a very deep recession. Neither choice is a good one.
And what this does is it completely flips the power dynamic. Think about the recent trips the Treasury Secretary has made to Beijing. Those weren't meetings from a position of strength. They were a quiet admission of this new reality. The creditor is now the one setting the terms. So what on earth does this all mean for you, the individual investor? The typical advice you'll hear is probably way too simple. We need to go deeper. The contrarian view here isn't just about what you own, it's about where and how you own it. It's about designing a portfolio for true sovereignty. Look at the difference. On the left is the old way of thinking,
a portfolio heavily concentrated in the assets and the currency of just one country. On the right, that's a sovereign portfolio. It's diversified not just by what you own, but by political and geographic location. This is the critical evolution and how we must think about preserving wealth in this century.
So the signal for you as an investor is this. Real diversification is now jurisdictional. The goal isn't just to survive market cycles anymore. It's to build a financial structure that is resilient to the fate of any single country, any single currency, or any single government. You're building a portfolio that is independent by its very design. After we've looked at the data, the geopolitics, the market forces, it all comes down to one single powerful insight. This is the golden nugget, the one thing to take away from all of this.
The ultimate signal is this. The long, quiet peace of a single global financial system is over. We are entering a new era, an era of competition between systems, between currencies, and between economic philosophies. And the job of the prudent investor isn't to pick the winner, it's to be prepared for the competition itself.
Before we wrap up, I want to leave you with one final and very important thought. Your financial journey is uniquely yours, and it absolutely must be protected with both diligence and professional care. So please remember, the financial landscape is constantly shifting. The insights shared in this analysis are for educational and informational purposes only. They do not constitute financial, investment, or legal advice. Every investor's situation is unique, and you should always consult with a certified professional before making any significant financial decisions. Our goal is to help you find the signal, but the final move is always yours. Stay sovereign and stay informed.